Hey, everybody, it's Hammer. Today is Monday, December 8th, 2025. Hope you all are doing well. Happy Monday. It's one of those Mondays already. So anyway, my name is Hammer. I am the founder of Originator Success, Grab and Go Social, and Rate Sensei, the guy that helps originators get loans from Google, social media, and all that good stuff. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, as we talk about what's going on in the markets with mortgage rates and pricing. This week, we got the Fed coming up. That'll get all the big talk. We got some JOLTS data coming out tomorrow, some treasury auctions, some fun things. So quite a bit to actually go into today, and we'll start to talk about it. If you are here this morning, say good morning. If you would like a reminder, a text alert that I am going live with the links so you don't miss anything and can join the show each and every day, you can sign up at hmmr.io/reminder or use this cool QR code over here. If you're on your phone now, take a screenshot, go to your photos, press and hold, and then you can open up that QR code link and go get it checked out. Also, if you miss any of the shows, don't forget you can sign up for our email commentary at www.ratelockadvice.com, www.ratelockadvice.com. Make sure you're signed up for that. Make sure that you do whitelist the email address that comes from, or else you'll have trouble getting it, especially if you use your corporate email or your company email. So anyway, good morning, y'all. Hope you're doing well. If you're watching the replay, don't forget, give us hashtag replay in the comments. Let me know that you were here. And let's go ahead and say out of the live, folks, and then we'll jump in and talk about what we got going on today. Good morning, Robert Bashir. Good morning, Rob Stewart, Eric McDonald, Yasmin, Martin, Mallory Fodiatis. Good morning, Candido Diaz. Who else we got here? Mega Bassell. Good morning. Holly Johnson, Amber Moser, Brandy Brickler, Nicole Simrad, Amy Blauser. Great to have y'all here. Zane, good to see you, sir. What's up, my man? We got Mr. Zane here as well. Angela Walters, Kenny Rivard. Good morning. Great to have all of you here. Ron Siegelson today. Friends, including Buddy the Elf. Yeah, you saw. I guess my wife posted that, right? I guess the thing. So we'll show it at the end. Stick around to the end. I'll show you some of my funny pictures if I can find any. Today is National Brownie Day, with or without nuts, with or without frosting. Great questions. That is the question of the day. Put that down in the comments, if you will. Let me know what you think. Allison Foy, good morning. Faye Strange, Kenny Rivard, great to have you here. What do you guys think? I love brownies. Oh, I love brownies. Brownies are awesome. I'll go with or without the frosting, if you will. I don't want nasty sugary frosting, but if it's like a real good frosting, it's really good. And I'll go with or without nuts. I've never met a brownie I didn't like except for a bad brownie. I am definitely a brownie person. So y'all fill that in. I'm going to get started, and we will talk about all this stuff going on. Let me pull up the screen. Here you go. All right. So I got to pull Presentify first. I forgot to do that. There we go. All right. So taking a look here, you can see this morning, mortgage-backed securities currently down a couple of basis points on the day. Not enough to worry about, though, by any means. Let me go ahead and remove that comment for a minute. So take a look here. We can see everything that we want to see really right here. When pricing came out on Friday, bonds were up a little bit. They kind of drooped on the day, not enough to reprice worse, but they did drop down a little after that. And then it was a total snooze fest. So that's kind of what we saw as a quick recap on Friday. You know, there were those early moves right here, and then it was just flat and it's just quiet. This morning, you got a little bit of choppiness here, but basically we are down a little bit from when most lenders started to set pricing, unless you got a later, reprice for some reason. But otherwise, you're probably going to see pricing that's a little bit worse than today. Not much. Than Friday. Not much, but just a little bit worse. If we take a look at Mortgage News Daily and use this as a reference point here, you can see that we capped out like we've seen before. We got our best levels Powell's over here on Wednesday last week, and then a little bit worse. Today would be a little bit worse. But you can see we've been in this 6.25, 6 3/8 range for over a month. And it's unlikely that we're going to see that break too much. Now, this week, of course, we have some of the biggest opportunity to see a change with all of this, because we have the Fed meeting happening on Wednesday, and it's a quarterly Fed meeting, meaning that we will see the dot plot. I just moved when I did this. Sorry. Now where did it go? Oh boy, damn Windows. Here it is. All right. So remember what that means is we're likely to see we're going to get the dot plot. So we've got Fed Chair Jerome Powell's press conference going to be the big deal. That'll be on Wednesday. And then we're going to get everything else. As far as today goes on the calendar today, there's not too much going on. If we take a look, you're going to see, hold on, I got to make this bigger now. So there you go. Let me grab the economic calendar. There you are. So if we take a look this morning, there's really not anything going on. We got a 3-year Treasury auction at 1 o'clock this afternoon. That's not going to move rates or pricing. Things are going to be really, really quiet. We're not going to see much movement. It basically in a position to cautiously flow everything into the Fed meeting on Wednesday, right? So we can go ahead. Right now, market's still pricing in, 90% expectation that we're going to see that Fed rate cut on Wednesday. Even though there is all this talk about the division in the ranks and what that's going to bring, markets are still convinced that we're going to see a Fed rate cut. The question comes, what happens in January? There's still, like I said, there's about a 20% expectation. By the time we get to March, that grows a little bit more. We're almost at about a 45% expectation. There'll be another cut by March. So that's what we're looking is to see what comes in the future. Remember, this June meeting will be the first one post Powell. So Powell gets replaced in May. So we will have an April meeting. That'll be Powell's last meeting. So I'm curious to see how markets start to price this in, but we've got a few months. The reality is rates are not going to move much lower than where we see them now. We're going to get JOLTS data tomorrow morning. That's one thing to definitely be aware of. It's going to be the first, let me grab the economic calendar. It's going to be the first data that we get in quite a while that has like even a little bit of freshness to it. If we take a look at that JOLTS data, that is October. So what JOLTS did is, according to this, they skipped the September, which is strange because they gathered September data, but they're showing this as October data. I don't quite know. But tomorrow, December 9th, we're going to get JOLTS data. This is the first JOLTS data that we'll have, coming all the way since. Oh, that's why this August one came out at the end of September. Remember, that must have been, that's weird. I don't remember. It must have been right before. Yeah, it must have been, right before the government shutdown. And then, so we didn't get October, November, and now we're finally getting December, and this reads as October's. So same thing. It's going to be delayed, but this is the only kind of last-minute labor report we're going to get right ahead of the Fed meeting. So we'll see some reaction to that a little bit. Randy said, how does Powell's departure bode for us? That's a great question, Randy Teakle. And that's kind of it's funny that you bring that up. It's one of the things that's in this Bloomberg article that they talked about here. It's also one of the things, let's see, this one, there it is. So it's also kind of referenced here, right? So let me put Randy's comment up on the screen so we know what we're talking about, right? So Randy said, how does Powell's departure bode for us? And that's the thing. Now, one thing that you have to say about Powell's term is they have done a great job of getting a consensus on everything. But the expectation now is going to be that we're going to see a more divided Fed as we roll into 2026. And there's concerns that the Fed is being, too much politically influenced. There was a time when the Fed was really not even referenced. The president did not, really talk about the Fed much, and they certainly didn't influence the Fed. That changed in Trump's first term. And he was the first one in quite a while. Not that it never happened, but he was the first one in quite a while to start to kind of put his opinion and his stamp on things when it came to the Fed. This second time around, of course, he's been extremely vocal. He's been a big critic of Powell. So the argument is that if it's Hassett that gets tapped and confirmed and takes over, that they're going to be pushing to get the Fed funds rate to drop. Now, what's interesting, this article here, what this is actually talking about, and it kind of goes into what you're saying or asking, is that what we see happening with bonds, the bond market's reaction to the Federal Reserve's interest rate cuts has been highly unusual. I don't know if I agree with that. I would love to know what you guys think. Siegel, what you think. Do you think it's been highly unusual? Basically, they're saying Treasury yields climbing as the central bank lowers rates. And that's debatable. Divergence in the bond market indicates a matter of heated debate, with opinions ranging from a sign of confidence that recession will be averted to a signal that investors are losing confidence in the U.S.'s ability to rein its national debt. The Fed's lack of control over longer-term yields has drawn comparisons to the Greenspan conundrum, with some attributing the issue to a bond supply glut caused by the government borrowing too much. Now, what this article, to kind of summarize here a little better than what AI did, is it talks about how that we are, even though the Fed is cutting rates, that we're not seeing yields drop. And that's because there's still inflation. And I mean, how many times anyone that's ever heard Barry Habib knows, Barry's been beating that drum for 30 years about how inflation is bad for mortgage-backed securities. Inflation is bad for bonds. And if you're investing money to get $1 today, but that dollar is only going to be worth 50 cents in 10 years, it doesn't matter if the Fed lowers rates, you're still not getting a return. So this article oversimplifies that a bit, and it's a little bit of an argument there, and I don't really love that. But they are kind of on point, that we will see that. Now here's again some more interesting articles. This one is about says, hey, markets doubt that Hassett can deliver at the Fed. But again, these are just opinion pieces by certain, people like Gregory Peters, and then over at PGIM and blah, blah, blah. And, all these different things. It doesn't necessarily represent everything that's on there either. Ron said Trump doing things differently and being vocal. Surprise, surprise. Yeah. I mean, and it is what it is. Ron said, I think the bond market is very predictable. Buy the rumor, sell the news. That's what it's been. So, but as far as rates go, heading into this week, I don't think that this Fed meeting is going to be good for mortgage-backed securities, for mortgage bonds. The last two meetings have not been. So I'll talk a little bit more about this tomorrow. But the last two meetings, we have not seen a positive reaction in bonds. We've seen in the days following the meetings, we've seen, pricing get worse. We've seen rates get worse. You can see that if we look at, let's get rid of all these other things and just have there you go. So, and now let's pull this. So a little bit, we can make it a little bit smaller. So, I mean, if you look at our last meetings here, again, we dropped right before that Fed meeting, and then boom, look at that. You jumped up, but it dropped to its lowest point right before the Fed meeting, and then it bounced up. Same thing last time around here in the October meeting. We dropped to the lowest point right before the Fed meeting, and then it bopped up. I think we have the stuff in play to see something similar. I don't know that we'll see price rate sheets, reflect necessarily the same best levels that we saw here, but I think we are going to see things get a little worse after the Fed meeting. Now, even with that said, we want to cautiously float into the Fed meeting and give things an opportunity and see where they play out. Ron said history shows Powell's a hawk in the press conference, regardless of what the rate policy announcement is. Yeah. So we'll get the rate policy announcement. We will get the dot plot for the last dot plot for the year. But then you're going to have Powell, and, I think that Powell is going to, I think he's going to really make it clear that they're not looking to make more moves after this Fed meeting. that this will be a slowdown. So I don't think it's going to be good. I don't think it's going to be good for rates, but we'll see. We'll see where it goes for now. The good news is you should be able to lock anything before you get reprices because you got time. Because we can react, because everything's going to happen in the afternoon. Tomorrow's JOLTS data, we could see a little bit of movement. Remember, that's going to come out at 10 a.m. tomorrow morning. So right now we want to definitely keep an eye on it. I mean, bonds are down 6 basis points. Pricing is just getting ready to come out. So like I said, we're going to see things that are a smidge worse than what we saw on Friday. Not enough that we want to freak out, but it's likely to see things that get a little bit worse. And after that, it'll probably be a calm day. There's not really a reason to expect anything. The 3-year Treasury auction this afternoon is certainly not going to cause any big moves in bonds or anything like that. So we don't have to worry about that. It'll be quiet. Tomorrow's JOLTS data is 10 a.m. If it were to come in unexpectedly strong, we might get a little bit of a negative bond reaction to that in the morning. But the 10-year Treasury yield has to catch your attention. Before I wrap up, let's really make sure we talk about that. We're up to 4.17 now. You could see that ever since, what day was it? It was back in November 25th, 26th, right before, was that before Thanksgiving? Yeah, right before Thanksgiving. This was our lowest level here with the 10-year Treasury yield. And since then, up. We have seen it coming all the way up right now. It is in a position to go ahead and test this green line. This is the 100-day moving average. This should give us a support level. Also, you kind of can draw a bit of a line like this. We're right there to test those levels. I don't think we have to worry about this 10-year getting much worse ahead of the Fed meeting. But after the Fed meeting, we could see that pushes up and we could be in that 4.20 range. And I think there's a really good possibility that that's where we could go from all of this. So Ron says the dot plot should be interesting since there's so much missing data since the September dot plot. Great point. Definitely a great point. So Robin Willard, good morning. Ms. Tenney, Pat, great to see you. I hope you're doing well. Merry Christmas. So anyway, that's it, my friends. Again, I don't think this is going to be good for us. Definitely want to keep an eye on all this. I was in a locking stance through most of last week, especially for anything closing near term. Things that had a little more time, we didn't have to worry too much. I mean, rate sheets have been pretty, we can look at bonds and talk about that, but I mean, rate sheets have been pretty much, there's really not a lot of movement that we had to worry about. We're not going to see, even if we see some negative stuff, we'd see rates push up another 1/8 or even a 1/4 point, but they'll probably come back down again. So we'll kind of dig a little bit deeper on this one tomorrow. We're getting ready to wrap up for today, but I would still cautiously float for the moment, but I'd be ready to lock. I mean, I'm not liking what I'm seeing here, where this is already when I started this, we were basically flat on the day. Now we're looking at being down 9 basis points, and the 10-year being at 4.17. I would have locked on Friday, which is what I had talked about. But that's why for now, let's just see where things go for a little bit. But I think we're going to end the week with rates a little bit higher. I'm going to sit and kind of stew on this for a minute or two after the show, and we'll see. So anyway, my friends, let's talk. Let's take a look and see how y'all prefer your brownies. If you didn't answer yet, Ron Siegel told us today is National Brownie Day. I have decided that brownies are one of my favorite desserts, and that we were asking with or without nuts, and with and without frosting. Allison Foy said with nuts, no frosting. We got no nuts from Tim Klyla, no frosting with nuts from Ron Siegel. Adam Check, no nuts. Adam Check, you like nuts. I want to see, you want to eat the edges. Oh, you like the crispy part? No nuts with chocolate chips. Amber's going for the double fudge brownies. Oh, no nuts, no frosting, slightly undercooked so they're gooey in the middle. Megan, I'm with you. I like that too. Tammy Metzger, walnuts, no frosting, a little well done around the edges. She's more like isn't it funny how we all like them a little different? She's more like Adam Check. Kenny Rivard, give me a pan of brownies and a gallon of milk. Amy said, you and your mom like mint chocolate brownies. Zane said that. Zane, you like mint chocolate brownies, dude? I don't think I've ever had a mint chocolate brownie. That must be something that your mom makes. That's pretty cool. Holly Johnson, peanut butter chips in the brownies are best. Yeah, I could do like a Reese's kind of. I'm there. And then you like the mint chocolate idea as well. No frosting, but from scratch, fancy or any box mix brownies you get. Yeah, brownies are one of those things that the mixes from the store are usually pretty good, especially like the Ghirardelli mix. I like their mix. I'm good with it. So, looking to see if there's any more comments or any more brownie comments. So brownies with no frosting. Oh, wacky picks. I forgot. Yep. All right. Let me show it. Let's take a look and see. I don't think I have too many, but let's take a look here and see. We're gonna have to go on Facebook because I don't have them on my phone. So yeah, on here you go. Lock. You locked on Friday. You're not playing. Yeah, I don't blame you, Christy. It's a good market for it. So for those of you that want to have fun at my expense, and we'll take a look at my wacky picks. Let's take a look here and see. Oh, yeah, there they are. If you want to see Hammer with Hair, here we go. Let's go ahead and put this up on the screen and share. So we did like a pub crawl in Waynesville over the weekend. And it was a Santa con, and everybody was dressed up. Like you could see it here in this picture. They were all dressed up in like different, kinds of Santas. My wife decided to go next level. She wanted more than Santa. So she said, would you dress as elf? And I was like, yeah, I love doing stuff with my wife. And she looked beautiful as, what was the name of it? Is it elf woman name? Let's see. Elf girl name movie. It's Jovi. She was Jovi. So at the end of the movie, Jovi, pink outfit, end of movie. So Jovi wears this outfit at the end of the movie. You can see her with the pink dress right there and that setup. And that is what images. Here you go. So you can see her right there. That's a good one. So like that's what my wife went. She was wearing that Jovi outfit. And I'm Elf, Buddy the Elf, baby. And I can tell you that everybody will come and talk to you when you are dressed like Buddy the Elf. And there I am with hair. It's certainly a different look. So this was us. Yep, we were chilling and we had fun. So there you go. That's me with the fun picks. Buddy the Elf. So all right, my friends, I'm going to wrap it up. Thanks. And you guys have a great one. I'll see you tomorrow. Take care, everybody. Bye-bye.